Hi, I'm Jimmy. In this video, we're going to look at my personal investment portfolio. Since the last time I did an update on my investment portfolio, I've actually added 2 positions. And let's face it, the market's gone a bit nuts. So I'm actually going to talk about another investment that I am considering at the time. But I'll let you know towards the end of the video. Now, generally, the process that I go through for the stocks that I want to add to my personal investment portfolio is to first research the business, make sure we understand the business. I actually did a video called 8 Steps to Analyze the Stock, where I walk through the steps that I use to make sure I truly understand the business. And then I try to come up with a fair value for the stock and ideally try to buy the stock below that fair value. Now, to help with the second step where we're trying to come up with a fair value, I much prefer discounted free cash flow. And because of that, we're in the middle of building a website. The website will look something like this, where we try to calculate quickly and easily using analyst estimates for free cash flow. That's what these numbers are over here. And basically the concept here is that you punch in the ticker of a stock that you might be interested in, and whatever your required rate of return is, I'm using 7.5%. Well, the investment website will kick back the fair value calculation. Ideally, our job is to buy it below that calculation. So if it's Home Depot or Lowe's, I know Lowe's looks like it is getting closer to being undervalued now at a 7.5% required return. Lowe's is looking pretty good. A stock like Microsoft is a stock I really want to own, but it hasn't fallen below my calculation of fair value yet. Apple, again, a stock that I'd like to own, but I need it to fall a bit more. Now, discounted free cash flow has long been proven to be a very good way to value stocks. A lot of the world's most famous investors use discounted free cash flow, which is why we're building this website. Now, the website should be up and running by the end of the second quarter of this year. So over the next few months, it should be done. Now, if you want to get access to this website, I will leave a link in the description below for how to sign up. And one of the advantages to signing up before the website goes live is that, one, we're locking in your price. So if you sign up today, we lock in the price. It'll never, ever go up on you. And the other thing is that you'll also get access in the meantime, and once the website's up and running, to our private investment community, which we're currently doing over on Discord. And I'm really proud of the fact that this community is almost up to 1,000 investors. These are like-minded investors, value investors that are looking to improve their overall investment portfolio. And we got to do private live streams over there. We got a lot of interesting things happening, and it's exciting to see how nicely that's growing. So again, if you want to sign up, I'll leave a link in the description below. But in the meantime, let's jump into my investment portfolio. Now, I know I just mentioned Apple, and Apple's actually a position that I do own, but I have this one off to the side because I had actually received a couple shares. I actually got 2 shares of Apple through affiliate links through like a trading app like Moomoo or a trading app like Robinhood. I had received 2 shares of Apple, which I've kept. So I want to disclose that, but I didn't actually buy them, which is why they're not really, and it's only 2 shares. So it's not really mixed in with my overall investment portfolio. But the first stock that I actually bought was Disney. And I bought that when COVID first happened and the stock market really took a tumble. I paid a bit under $100 a share. We could see that right there. That's what the numbers are. That's the dollar amount that I paid for the shares. This currently represents about 7% of my portfolio. Right now, Disney's trading at about $1.33, so I'm up a bit. I have, using our discounted cash flow calculator, a fair value calculation of about $110 per share. So the stock appears to be slightly overvalued according to my calculation of fair value. Now, I do want to point out that people often ask me, if the stock is overvalued, if it's past your target price, why aren't you selling it? And the fair value calculation is not the same thing as a target price. So target price is generally, I look at a target price as something that you would use for a trade. So if you're interested in trading a stock and you say, okay, I'm going to buy it at 100, I'm going to sell it at 110, that's the target price. The fair value calculation implies if the fair value is 110 and you pay 110, you're going to receive your required rate of return. In theory, you're going to receive your required rate of return from there on out. So it's not necessarily, I just wanted to get there. And since these are very long-term investments, sort of buy and hold investments, I have very little interest in selling, although there is one I'm considering selling. I'll get to that in a second. Next, the next stock I bought was Intel. I bought it at $45.74. It's currently trading slightly above that at about $47, $48 per share. I have the fair value at about $73, although I do expect this to be a long-term investment because Intel has some hurdles that they're clearing that I think over the long run they should do quite well. At least I'm optimistic that they will. But again, this is a long-term investment. The next stock that I bought, and I bought this after I bought Disney, then I bought Intel, and I wanted to add some defensiveness to my portfolio. And in the current macroeconomic environment, it's actually done quite well for me, and that is Lockheed Martin. So I paid $336 per share. And again, I did videos on all these stocks before I bought them. So if you're curious, I will leave links in the description below to all the videos for each of these stocks, and I addressed why I was buying it. I make a video before I buy a stock. That way you can sort of understand my thought process. But this was a defensive stock. I have the fair value calculation today at about $435, and the stock is currently trading at almost $450 per share. So I'm doing fairly well in this overall, in this investment in general. And that's one of the advantages of holding defensive names. And because when the stock market was flying high and when I bought Lockheed Martin, the stock market was doing quite well. Well, since then, the stock market has gotten a little bit hairy, but the defensive investments tend to do quite well in those times. So this was sort of the reason that I bought it. But then I wanted to add a little bit of growth to my portfolio, and I jumped in and bought Alibaba. My average price is $141.67. Alibaba is currently trading closer to $100 per share, so I'm down a decent amount in this one right now. Although, again, over the long run, I'm expecting this one to do quite well. I have the fair value calculation up near $217 per share, and I'm expecting that in time the market will gradually recognize the value that Alibaba brings from a cash flow generation perspective. Okay, next one I bought was AT&T. My fundamental reason for buying AT&T was that they are spinning off their Warner Media business, and we as investors should get a piece of the Warner Media and Discovery deal, which I like. And I like the idea of AT&T going back to their core business. They spun off DirecTV, getting rid of Warner Media. And I think that the core communication services sector, sort of Verizon, AT&T type of business, is a good business and has a long-term, it has long-term staying power. And I think that the company got away from that for a long time. And I think that they're going back to it now. Plus, they're cutting their dividend, which I actually like. I think that their dividend was a bit too high for too long, and they had too much debt, and they're reducing that a bit. So overall, I like the direction of the business. Right now, the stock is trading at about 23 and change. I paid almost 25, so I'm down a little bit. I'm not including dividends in that, so I would have received a little bit of dividends so far. But overall, I am down a little bit, but I expect, again, over the long run, for this stock to do quite well. The next stock, and this is the interesting one before I get to the two new ones that I've added, is Activision. So I bought Activision. I did a video on Activision a few months back, and when I bought Activision, the company was in trouble with different problems that they were having with how they were treating their employees. And I bought Activision thinking that it was a good fundamental business, and over the long run, they could turn it around, maybe get rid of their CEO. Well, since then, as we can see, I paid about $63.40 per share. Again, I made a video on this before I bought it, but since then, Microsoft has announced that they are acquiring Activision, and the stock jumped to about $80 and change. So I'm up a decent amount in a fairly short period of time. Now, I have the fair value calculation at $102 per share, but it's almost irrelevant since Microsoft has said that they're paying $95 per share. Now, what I'm considering doing is I am considering, do I sell this position? It's at $80 per share, so I'm up $17, give or take, $17 per share. Should I take that profit and perhaps invest it in another investment opportunity? One of the real advantages of the market going through the troubles that it's going through right now is that there appears to be lots of investment opportunities. That's one of the reasons we're putting up the website, because it's a quick and easy way to come up with a fair value calculation after we've done the research. For example, a stock like Visa is a stock that I really like and I think could be worth buying. It is below my calculation of fair value after I account for adding a margin of safety. Margin of safety is essentially like, hey, what if this calculation is wrong? So to add a buffer area, I like for it to get below that. Visa is currently there. I'm considering perhaps selling Activision, taking the profit there, and then buying Visa. So I haven't done that yet, so I will let you know if I do. But in the meantime, the next stock that my most recent purchase, or second to most recent purchase, was Facebook. Now I bought Facebook at $2.24 per share. Not my best buy. The stock has continued to fall. The stock was tumbling for a long time and has continued to fall. It's down to about $200 per share right now. So I think it's just under 200 right now. Although I had the fair value calculation up almost at 400. It's at 374 is where I had my fair value calculation. So again, over the long run, I like the prospects of Facebook. They generate so much cash that I think that the business could fundamentally keep growing, and eventually the stock market will recognize that. The other stock, which I was very excited to see to fall into my fair value range, was Google. Google, I recently did a video on. I did buy shares of Google. I got an average price of $26.07. The fair value calculation is up near $33.31, I believe. I think I had $3,331 per share. Now, they are doing a 20-for-1 stock split. So this stock split is going to, basically, if you own 100 shares, it's going to give you 2,000 shares. Yeah, 20 times whatever shares you bought. So, but the stock price will drop by 20. So, 20 to 1. So, that is my overall investment portfolio. And long term, I'm very excited about the current environment from a value perspective. There's so many value stocks out there. And if you'd like to get access to the website, please come over, sign up for the website, and you'll get access to our private investing community. In the meantime, we do private live streams every week where we are calculating the fair value of a bunch of stocks. We are building different investment portfolios. So if you'd like to sign up for that, I will leave a link in the description below. I got a link right over here. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.